everybody. I'm Peter Grant with Zaner Metals in Denver, and you're watching This Week in Metals. You're watching my friend Peter Thomas. What do you know?
I know that it's real nice to see everyone. Another wild week, big movement. All of our silver apes that were buying at 24 were tremendously rewarded by a run above 26 towards 27. Very, very exciting action this week. We started getting a lot of stuff in from the Riddick people about doing swaps. A lot of you have been looking for a house that does swaps. A lot of you bought gold and now want to move over to silver. Also, getting some platinum palladium guys contacting us that want to move into silver too. We do swaps. We're one of the few that we know that does, and we want you to know that is available. Pete Grant or myself at Zaner Precious Metals. We are available to you to do swaps. You got a small roll of 10 gold coins. We can get you a box of silver. So take a hard look at our price at Zaner Precious Metals. You'll see what our numbers are. Give us a call and we'll take care of you on your swap.
Yeah, so for clarity's sake, we're talking swapping physical, swapping gold for silver or platinum for silver,
right?
Physicals.
Thank you, Peter.
Because we deal in the swap market as well in a different
That's
capacity.
right. Yeah, we are swap dealers. You're right. Yeah, we don't want to confuse anyone.
Right.
Okay. Yeah.
Right.
So, hey, listen. Now that we're doing stuff for the apes and for the silver market, really startled a lot of people today. And to be accurate, I actually wrote down the numbers, which I've been using the Silver Institute. You guys, it's free, great source. Get a chance, subscribe to it. They put out great numbers. They came out with industrial demand numbers and consumption on the industrial side, which is important to remember because silver is not only it wears two faces. It's industrial and as well as it has an intrinsic value as well. They're looking for growth in the electrical side, which would be what we refer to as PV, which is a photovoltaic, or just general electronics, such as making silver paste for solder and things of that nature, for cars, for computer keyboards, everything that is conductive of electricity. They're looking this year, they're saying 27% increase all in. And on top of that, this was very interesting, gigawatt usage, which means anytime you pass electricity through something, it's either going to be an aluminum, copper, platinum, palladium, or silver. We're going to go from 159 gigawatts to 181 gigawatts of electrical consumption. That's a 27% increase. And the only way you can pass it is with copper or silver. I mean, these are staggering numbers. And I wanted everyone who's following silver, who's collecting silver, who's thinking about it. These are very, very strong, supportive numbers. And I have to tell you that Silver Institute is really good at their collection of numbers. Also, additionally, we saw expectations for the U.S. 5-year break-even inflation rate calculated by subtracting real yield against nominal yield has moved to the highest level in nearly 10 years, which is 2.6%. And the last time we exceeded that number, silver was at $48 an ounce. So there's Pete, I know you follow these numbers, and were you startled by that?
I was. I don't know that I would say I was necessarily startled. They're impressive numbers and strong numbers. It is reflective of the conversations we've been having for more than a year now.
Oh yeah.
About anticipation of stimulus dollars going towards technology infrastructure,
Sure.
green initiatives. And this is all part and parcel of that, I think.
Yeah.
And so the very numbers that you mentioned, I wrote about in my newsletter this
It
week,
comes out
and
every Wednesday,
and,
guys.
and
Really.
yeah, and so again, it is reflective of a very strong demand. Um, I'm a little bit worried about the supply end of things, as you might imagine.
Yeah.
But and so I think that the prospects are certainly for higher prices in
No,
silver.
no question.
We've maintained for some time now that silver is undervalued here in
Yes.
the mid 20s, and so I think that there is upside potential as all of this projected demand becomes a reality, and then the realities of the supply side of the equation come to the fore as well.
Well,
So
let's talk about supply side in Singapore. Actually, I had a chance to speak with Spencer Campbell in Singapore just yesterday, I believe, and he was telling me about these individual who's putting 15,000 tons. That's 15,000 tons of silver into storage in Singapore. I mean, there's some big players stepping up here, putting a lot of metal back, and I got a feeling they didn't make all that money being stupid. And I think that we're seeing hoarding on a scale that we've never seen before.
yeah, and I think that that 15,000 ton
Mhm.
story is that I can't remember who it was now. Somebody's building a new vault, if I
He's
recall,
building a
in Singapore.
oh yeah, a gigantic vault. And by the way, we're in contact with them now, and we're trying to see what we can do about a little give and take there. We might, you know, Papa Pete might need a little bit of that if they could let loose. So we're trying to build a bridge there right now. So let's see how that goes.
Yeah. So the bottom line is that silver was up nearly 3% last week. It was
Yes.
the second consecutive higher weekly close, and we reached a 4-week high of 26.30. Although we couldn't nail a close above 26 bucks, which I guess I'm not all that worried about. Not surprising to see some profit taking ahead of the weekend, given the pretty solid gain that we experienced. Um,
Across the board.
yeah,
Across the board. Yeah.
so traded and closed back above the 100-day moving average, which is encouraging.
Yes.
We were briefly above the 50-day moving average, and we have now completed a more than 38.2% retracement of the recent corrective phase. So all of that is pretty encouraging. My number is still 27 bucks. I'd
Okay.
like to see uh, the market trade back above 27 bucks to the point where I can still feel really confident about the underlying uptrend. But make no mistake, I believe that the underlying trend is definitely still favorable. And you know how I feel about the ratio. The gold
Yes, I
silver
do.
ratio really struggled above 70 in
Yeah.
recent weeks, now trading around 68 or so, a little bit over 68. So as long as we remain below 70, I like silver, I think buying opportunities on dips remains the preferred strategy there.
I just look at it this way. Demand is getting larger by the day and they can't find any more. Okay. I mean, it takes quite a while to develop a mine. And we had Dr. Davis on this show not long ago, who's probably leading expert in mining in the world. And as he put it to us, he said it's 7 years from digging the hole to delivering it. So I don't know where they're going to find this stuff, but
Well,
there's a
wasn't it
big
uh, was it Peru last week, or no, 2 weeks ago? I think Peru shut their borders again
again,
because of
again.
COVID, right?
Yeah,
And they're a
right.
major producer of
Peru is a major
silver.
contributor to all of Asia. People don't know that they're a very active sales force,
Yeah, I
and
think they were saying that they were going to be closed for a couple of weeks.
yeah,
So
yeah.
my guess is that they're probably not
Well,
open yet.
hopefully, we'll see inoculations continue to go around the world and continue to bring this down. Let's hope
Yeah,
for the best.
it's certainly been a bit of a mixed bag, even as
Yeah.
we get broader distribution of
Mhm.
vaccines, certainly the J&J pause.
Right. That
you know,
didn't
may
help
have put
a thing.
a hink in things,
Yes.
and you know, there's talk of, you know, a fourth wave. We're seeing some upticks here in Colorado, for example, in cases, and primarily associated with some of the variants, um, but but the general underlying theme still seems to be recovery. You know, that there's light at the end of the tunnel with regards to the pandemic, and things are looking pretty bright moving forward, and certainly with substantial additional boost from uber accommodative monetary policy and fiscal stimulus as well.
Okay.
And so let's talk a little bit about, let's circle back to gold.
I
Um,
think so too. Yeah. Gold was
yeah,
had gold. First off, some very, very interesting numbers in gold. China has been laying in the weeds, talking about how they're slowing down their consumption. They don't want their citizens buying gold, yada yada yada. Okay, you know, and the next thing you know, the Communist Central Bank steps up and buys $8.5 billion worth of gold. Just I went, what? You know, that was just what, yesterday, right? It just gobbled it up, and they said, okay, thank you. We needed that because we were a little bit behind. Behind what? You know, the question becomes, you know, why do you buy $8.5 billion worth of gold? Then on top of that, maybe 3 o'clock this afternoon, I get a note from one of my friends in India, which says they just took on board 14.8 tons of gold, expectations coming in over the next 3 weeks, coming into India for demand, and it's all been paid for. So it's all going to be delivered. I mean, we are seeing massive quantities of gold. We're looking at you know, very close to 30 tons of $30 billion worth of gold all of a sudden just getting snatched off the market. I'm wondering what's going to happen next week when that hits.
yeah. So we talked about that last week, the revival of central bank demand,
Right.
and I think, um, you know, when China says they were behind, I think that
Yeah,
they had
right.
a, you know, a very definitive plan about how much
Oh, yeah.
gold they want to be
No, that's a very
accumulating,
valid point.
and
Yeah.
I think the strategy is really obvious at this point. It is reserve diversification. It is out of dollars, out of treasuries, into gold.
Well, you know, I don't know if you know how big that number is that you just rolled off of the table there, but that's over $1 trillion. You know, I mean, you know, is there a trillion? I mean, let's see. All right,
There is absolutely $1 trillion worth of gold out
there
there.
is. I'm
It's
just
just
thinking about it
dependent
right
on
now that
price.
yeah, no, there's $1 trillion worth of gold. There is. But the question is, at what level do we start valuating it? I mean, do we go to 2,500? Do we go 3,000? I mean, at what level will it become $1 trillion? You know, we might see $5,000 gold then, you know.
Well, you know, $1 trillion isn't what it used to be, my friend.
Yes.
We're throwing trillions around
I, I
like
I
they're
know, yeah,
quarters.
yeah, I know. Biden's going right. Got in the lower drawer over there. I got a trillion over there. Just grab it
Yeah.
up. You know, we need it. But those two gigantic numbers, I think I wanted to get out there because um, gold demand has been big. I could tell you at ZanerPreciousMetals.com, we're seeing a lot of demand for gold itself too, and gold eagles, as a matter of fact. And we're seeing buffaloes, which are 24 karat gold, which United States Mint makes. We're seeing some demand for those, which we haven't seen in a while. So consumption is picking up across the board for metal right now.
Yeah. So gold ended the week up 2%. It was the third consecutive higher weekly close. In fact, it was the best week in 4 months.
Yeah.
We set a 7-week high at 1783.83 before prices moderated a little bit on Friday. You know, last week we were talking about the double bottom that had formed, And I was a little bit worried until
Yep.
Thursday last week because we didn't really get any upside follow through. So we saw the double bottom confirmed. And then there was like no upside follow through. The market sort of consolidated.
Got
But
lethargic. Yeah.
Thursday we saw some upside follow through. Uh, nearly got to $1,800 by the end of the week. And so things are looking really good. I'm sticking with my 1833.11 to
Okay.
1828.84 objective. That's a measuring objective off the double bottom and 38.2% retracement of the corrective phase. Um, we continue to see ETF outflows
Yes.
here in the
I
West.
that's a very valid point, and not small either.
Yeah, and in fact, the World Gold Council noted that of all the Q1 outflows, um, it's been like 86% of them were from North America.
Yeah,
At the
I mean
same
the
time, in
mhm.
March, Chinese ETFs set
Yeah.
a record high of 72.4
Okay. You cut
tons.
me off at the pass, buddy.
Yeah.
Yeah, but that's where I was going. Yep.
So kind of, I mean, it's very reflective of the regional realities of the market right now.
Yes.
As uh,
Asia's coming back, and we've talked about this for a year and a half on this show. When Asia comes back, they don't come back in small ways. And when they start buying a billion here and a billion there, and their ETFs increase as much by 78%, look out, folks. Something's going on, and we're going to see, even though the shipping costs are still exceedingly high, metal is moving to Asia in a big way.
Yeah. So another important theme is inflation, and I think that's a real tailwind for gold as well.
Yep.
Inflation expectations are extremely high right now. We had CPI out last week. CPI is now running at 2.6% year
Yeah.
over year.
Yeah.
That comes on the tail of PPI, which came out in the previous week, which jumped all the way to 4.2% year
Yeah.
over
That
year.
startled a lot of people.
Import prices were up 1.2% in March. Expectations were plus 0.9. Export prices 2.1% in March
Yep.
on
And and
expectations of,
and
of less
energy
than
ain't getting
1%.
any cheaper either. If you notice it's across the board, propane, gas, jet fuel, all of it's going up.
Yeah. So
Yeah.
inflation is here,
Yeah.
and now it becomes a question of how much inflation are we going to see? With regards to those import export prices, I know what you're thinking. It's like, oh, if export prices are higher than import prices, we're going to lower that trade deficit. Not so fast, my friend. No, because imports are so much more than exports. In
Oh yeah.
fact, the trade deficit hit a record 71.1 billion in February. I suspect the record's going to be broken in March.
Uh,
So
I'm glad you mentioned it. I
yeah,
mean, it's a critical thing. And oh, by the way, we used to be the number one exporter of oil. Now that we've turned off all the federal lands and the pipelines, we are now going to be buying oil from our enemies again. That's going to be interesting because that ain't going to get no cheaper because it
yeah.
has to be shipped, and the pollution it creates coming in the trucks and truck coming on the boats is monstrous. So
Price of gas has doubled here in
yes,
Colorado. I don't know what it's in Illinois, but
33 to 40% we've seen an increase.
yeah, it's
Yeah.
went from like a buck 70 to 330 now, I think.
Yeah. Oh no. It's the energy policy is a disaster, and it's just getting worse by the day. So you know what? Let's take a quick look at copper because we've been talking about electrical passages and whatnot. Copper is at a 10-year high on in the scrap community right now. We are well above the $4 mark and continuing to stay bid. We're seeing scrap yards. We represent scrappers. We love you guys. Continue coming to Zaner. We're happy to help you mitigate your risk. And we are seeing used cars, for example, when they're bought to be crushed, their price is up 26%. I mean, it's beyond belief. And here's another number. 59% of all houses being sold right now are sold within 2 weeks. And the average amount of copper used in a house is 400 pounds. So anything that's getting built is sold in 2 weeks from the time it's sold, and the copper that's in it is just being gobbled up and it's off the market. And so we're seeing huge demand and we're not being able to meet it because the cars that we strip out and crush, the houses that we tear down and whatnot are not keeping up with demand. So it looks to me like our scrappers are going to continue to be making good money because demand really looks strong, Pete.
Yeah, and in fact, housing starts in March were up 19.4%
What was the projection? Did you see?
to 1.739 million. The market expectations were around 1.6, so
Okay.
they were expecting a strong number, but not
Yeah.
1.7, more than 1.7 million. It was a 15-year high in housing starts.
Oh yeah. I mean,
That's huge for copper,
oh
huge for copper
yeah.
and lumber and other things, but and so the lumber market continues
You
to go
know,
through the roof as well.
as we tell everyone, 40 pounds of copper per unit for a car on an electric car, on an EV car, 110 pounds of copper in a car. Some, like for example, Singapore says all cars are going to be electric by 2025. So let's start looking at demand there. I don't see, I think our people that were buying this break that was below $4 on copper were tremendously rewarded. I think that we're going to still continue to see good demand across the board in everything that has electrical passage, Pete.
Yeah. So copper was up 3% last week. Second consecutive, I mean, at one point it was up 4%, but it sold off on Friday.
Yeah,
But second consecutive higher weekly close. We set a 7-week high at 424.09. It was the biggest weekly rally since February.
yeah.
So the market looks great, I
I
think.
know
And
we're talking futures, guys. In case you went, hey, wait a minute, we're looking at them. I mean, the cash markets at a 10-year high. Futures markets are different critters. I know sometimes it can be a little confusing, so I wanted to throw that in there.
yeah, my numbers are based on spot copper.
Okay,
So
excellent.
so we're still off of the high that was set. I think it was in February.
Yeah.
But we seem to be on the trajectory to go higher, and
So answer me something.
$5.
What is going on in the PGMs? I mean,
So yeah,
huh?
platinum. Let's start with platinum.
Okay,
Platinum actually was up ever so slightly last week.
gotcha.
Couldn't close above 1,200. Well, actually, it just closed barely above $1,200, I think. Still in the range, but I think overall it still looks good. When again, sort of the same dynamics that are driving the silver market, I
Yep.
think are driving the platinum market as well. And so I think that ongoing robust demand. Certainly, if the
The
if
Russian mines, for example, haven't reopened and aren't
right,
going to for a while. So as far as
tight
source goes,
supply,
we have been denied of 13 or 14% of the market is still shut down.
yeah.
So where is that going to come from? And that's obviously coming from our recyclers who are doing a bang up job right now, and they're really holding this market up. I hope that all of our AutoCats guys continue to crank it out because we need you guys. We really do.
Yeah. So again, I remain generally favorable the platinum market. We might have to stick out another week or two of consolidation.
Mm,
But I'm encouraged by the price action in Palladium this past week. Palladium closed up 5.3%, hit a 13-month high at 27.85 and a half, and we're just $90 away from the all-time high at 28.75 and a half. So that market looks really strong. And I think once we see palladium move to new all-time highs, it's going to drag platinum higher as
Oh, well,
well,
I
even
mean,
if it's a little kicking and screaming.
look at, don't forget, we've been telling you, we broke the news a long time ago here at Zaner on hydrogen. Hydrogen is going to be powering everything in China. It doesn't matter. They're going to need platinum and palladium. It doesn't matter. South Africa just announced that they're going to try to phase out the complete use of diesel for all of their mines as soon as possible, which in South Africa could be anytime. But generally speaking, they're talking about going completely hydrogen. And I'll tell you what, that is a great health issue because that will really cut down on the pollution around the mines area because they're running number two diesel and they're still having their running blackouts there as far as production goes, which is another reason why we should be buying PGMs, platinum and palladium, because the mines are running out of electricity on times when they should be running. And so hence we have less product around. So when they switch over to hydrogen, they're still going to need more platinum to split the water to get the hydrogen to run. So it's catch or catch can. What's going to work? Less pollution, but still we're going to need more product. So I think it's a win-win, Pete. I like
Yeah.
these levels.
Let's look ahead to this week really quick.
Please do.
The two big things on the calendar are Bank of Canada and the ECB announced policy this week. I think everybody's going to hold steady at this point.
I'll sleep through that one. Yeah.
Yeah, yeah. And then just market PMIs late in the week. So it's actually kind of a light week in terms of the
Yeah.
calendar. But it's the technicals for just about all the metals look really good at this point, and as do the fundamentals. So I'm
Yeah.
encouraged, and we'll keep an eye on things, and you'll get an update midweek when the Grant on Gold newsletter comes out.
Yeah, please subscribe to the grant letter is terrific. It comes out. It's every Wednesday we put that out. And give us a like and subscribe to us. This will be in your box when you come home. You can catch up on what happened over the week, get some projections as to where we feel things might end up as we look at them from the cash side. We never talk positions to you, but we tell you what we're seeing on the physical side, which really drives the real world versus what's going on in the paper world, and a lot of people like the idea that a lot of times we're pretty far ahead of the curve.
Yeah. With
Yep.
that, my friend, I will tell you to have a great trading week. And for you out there, I'm Peter Grant with Zaner Metals in Denver. You guys have a great week as well.
Pete Thomas in Chicago, thanks for dropping by. We always, as always, we appreciate you. Bye bye.